Hi, everyone, and good afternoon. It's a rainy day in Cape Town. In fact, it's been a rainy week. We've had horizontal rain, vertical rain, but I know the weather is gorgeous in Nantucket. And I have a great friend of mine on today, Bob Diamond. And all of you know his fame really comes from being my golf partner.
Yes.
And all of you know that. So, and Bob, you're welcome. Welcome on the show. Yeah, Bob Diamond is the founder, owner, made majority owner and chairman and CEO, Bob, of Atlas Merchant Capital, based out of New York, but an international business. Do you want to quickly tell us where you are, though, most importantly, because you're a lucky man?
I am on Nantucket, Massachusetts. I've been hiding that fact, but you just gave it away, Rob. You can't keep secrets. We came here March 17th. Jennifer and I, kind of, New York was feeling very, very small when it went to stay at home. But I was one of the last knuckleheads trying to get into the office every day, and it was only when they closed the office in New York and closed the office in London I had no escape other than staying in an apartment. So we came up here where it's much more, it's an island, it's a lot more property. Our daughter and her husband and their son came with us. She's expecting twins, so it was really nice. They both have their own small businesses, so we've been all running our businesses from here. And I must say, Rob, like most of us, I think I found the technology easier to adjust to, more adaptable. We've stayed very busy. I think it's been constructive. We've done a lot of business during this period, but I want to be perfectly frank. I'm ready to get back. I want to get on an airplane. I'm ready to go visit the team. I'm ready to go visit some of our investors. I'm ready to go see some of our portfolio companies. I'm ready to get back.
Good man. It's incredible about Bob Diamond. I think there are 10 of him because there was a period about 2 years where I'd go to Tokyo for a conference, nothing to do with anything he's involved in. I'd run into him in the lobby of the airport. I think it was Bob number 2. Then I'd meet Bob number 3 at an airport somewhere. So you are peripatetic and amazing. And Bob, just tell everyone a little bit about Atlas Merchant Capital, because you've been doing that for a while now.
So when I stepped down from Barclays in the summer of 2012, this would be a surprise to most people, but I had been a professor before I came into banking. And I thought joining the faculty at Yale was a perfect kind of capstone to the things that I had done. And great institution. I really wanted to be a teacher. My mom and dad were both school teachers. And I met during that a graduate of Yale, David Seamus, who became my founding partner at Atlas Merchant Capital. And to be perfectly frank, having done the things I had done over 30 years, as many of us on this call had done, it was just a little bit too much of a slowdown. And I really treasure and privilege the access that our careers have given us in places around the world, from the Middle East to Asia to the UK and Europe. And so David and I spent a year thinking about, is there an opportunity for us to set up a firm that invests in financial services where the thing that sets us apart is that we're not just great investors, but we're great operators. So we're not always a majority investor, but we always have some influence, and it's always in support management. We have 4 portfolio companies in Europe, 5 portfolio companies in the US. 3 are broker dealers, 2 are significant insurance investments. We have an online bank in Italy. The chief executive is Corrado Passera, who many of us remember from his days as finance minister, but also his days as CEO of Bank Intesa. And we have one large asset management business, and outside of our fund, one large financial technology business. So it's been really enjoyable to be looking at the opportunities that have been triggered in financial services since the crisis in 08 and 09.
And how do you structure your investments? Is it SPVs, funds?
So we have done a few things that are just direct investments where we brought partners in, but the vast majority have been through our fund. So we raised capital. Our first fund was $700 million. We're ready, very close on the second. We have the only other strategy that we've done, Rob, and we began about 2 years ago on this, and our timing was very, very fortunate, but we felt that there was a huge opportunity to invest in distressed. crazy to say 2 years ago because there was no distress. But I think simply looking at the cycle, and at that point, 10, 11 years on from the financial crisis, zero interest rates, QE1, QE2, QE3, lack of covenants, we felt that at some point in the next couple of years, that there would be a trigger to somewhat of a restructuring of the low end of the credit market. So we went out and recruited a young man named Ty Wallach, who had spent time at Oak Hill and Polson and had decided to set up his own. So we've done it in partnership. We've launched this strategy, and we think the opportunity in the US, UK, and Europe, which is our focus for everything, for our financial services fund, it's the developed economies, US, UK, Europe. If it's dollar, if it's sterling, if it's euro, it's interesting to us. And it's the same thing in distressed. And we think over the next 2 to 3 years, there's going to be a pretty phenomenal opportunity to be investing in the below investment grade area as we see more and more deterioration there.
And have you got quite a bit of dry powder right now?
Well, we've been very fortunate in that in what we're doing right now, it is dry powder. We have completed investing our first fund in financial services.
You know, it's quite interesting because Greece had its wipeout. I mean, and you were in the market at that time, but you didn't take advantage of that, or you didn't pull the trigger on anything there, did you?
Italy has been a much better opportunity. It's a little bit bigger of a market, but I think also in Italy we had a real serious competitive advantage, which is Corrado Passera, and he has put together a group of people. And you know what they're doing there, which is very interesting, is they're a digital competitor bank, but they have a competitive advantage in that they're both, since they're looking at investing in small businesses, they're very active in the NPL market, both in financing some of the US hedge funds and European hedge funds who are investing. But in most of those cases, they take a little sleeve on the balance sheet as well, and they're able to position the parts of these NPL portfolios that happen to match up with the sectors of the market where they're looking for relationships anyway. So obviously the last period in Italy has been very challenging, but Corrado is steering through this very well.
Because, you know, you founded this a number of years ago. You're in the distressed NPL market. Who would have thought that this would have happened to us over the last 3 months? Yeah. Everything's distressed. There are going to be a lot of NPLs. Yeah. You're well positioned for that.
Yeah, we're going to see bankruptcies go up significantly, both here, I believe, or we believe at Atlas Merchant Capital, both in the US, notwithstanding the phenomenal impact of the Fed, but the below investment grade, lack of covenant sector will provide that opportunity. And I think we're going to see a big run up in bankruptcies, particularly in certain sectors of the market. Energy is an obvious example. But I think with much less fiscal and monetary stimulus in Europe, particularly on the fiscal side, we're going to see even better opportunities there.
But let's talk Europe, US.
Yeah.
Banking sector. Can you tell us where we should be looking as investors?
Yeah. You know, Rob, I would back up a little bit and say that from a public policy point of view, whether it's around trade, whether it's the euro, whether it's US-China relationships, there has been precious little new post-COVID-19. What we've really seen is an acceleration of trends that were in place before this. So the technology trend, it's not new. It was in place. It's accelerating. Well, I'd say the same for banking. And if we step back and look at 2008 and 2009, the US reaction, which I was right in the middle of with the acquisition of Lehman and the combination of BlackRock and BGI at the time, two very, very important transactions. But what happened in the US is the Fed stepped in and Chairman Bernanke was very, very quick to signal lower and lower rates, do what he has to do. Secretary of the Treasury Paulson failed at first, but then succeeded with TARP. And basically the US approach was, we need to save the system. And TARP forced equity into every bank, whether they were solvent or insolvent. And by the way, many of them will not admit it today, but were insolvent. I mean, we look at Citi, we look at B of A, they were insolvent at the time. and others probably would have made it through a JP Morgan, as an example. And the conditions for that program were: one, everyone takes equity, strong, weak, no stigma. Two, in order to pay that equity back, in order to pay dividends and pay bonuses, you have to pay that back. And oh, by the way, to pay it back, you need to pass our stress test. So the Fed and the Treasury put a system up that had no stigma, put plenty of equity in the banks, and had the right incentives lined up. And what happened? You know, we're 11 years on, and Citi and B of A are monsters, and the U.S. investment banks are dominating the global business in that area. Where the European banks were, I'm not sure how many of us remember this, but President of the ECB, Trichet, raised interest rates at the time. And it wasn't until 3 or 4 years later, when Draghi came in and said, I'll do what I have to do, that the solvency was assured. But there was kind of a biblical justice meted out to the banks in Europe. If it was good for the banks in the minds of Europe, then it had to be bad for us. So here we are with so many of the big banks in Europe still struggling with non-performing loans, low capital levels. So I think here we come into the COVID-19 in 2019 and 2020, and I think those those trends are not just accelerating, but I would say they're becoming galvanized. And so the European banks, there are a few exceptions to this. I think Santander is one. I think UniCredit is one, where the leadership, the platform, what they've done to the capital levels allow them to be to have an opportunity to earn above their cost of equity. But in many cases, in the UK with Royal Bank of Scotland, certainly with Deutsche Bank, we're still seeing a very challenging environment for them. So the advantage of the US banks versus Europe, I think, is widening during COVID-19, and I think it has real implications for how we invest going forward.
How does HSBC fall into that?
Well, it's very interesting right now for HSBC. I think how many times have we heard since the crisis in 2008 and 2009 that they're restructuring? I mean, it's like once a year.
Yes.
And now they're facing the challenge of the changes in Hong Kong and the changes in China. So phenomenal institution, but in terms of kind of can they continue going forward the way they have in the past? I think there's a real question about how they're going to balance the changes in Hong Kong and China with the rest of their business. But Rob, what I really see is a change, and this happens, you know, even in the U.S. we're seeing this to some extent. But as a result of the Fed programs, the Treasury fiscal, what President Lagarde has done with the moves by the ECB, which have been very aggressive, maybe behind the U.S., but pretty aggressive for Europe. And now the potential for the recovery plan, which is really a fiscal move. The largest national banks that during 2008 and 2009 were deemed too big to fail are even too bigger to fail. And all of them are becoming more intertwined and interconnected with their national governments. And that's even happening in the US, where you see the big banks implementing many of the Fed programs, implementing the PPP programs to get loans to middle markets, where the regulators are willing to change capital levels when times are good based around public policy initiatives. So this will never reverse itself completely. And I think it has a couple of implications. Implication one is that I think the big national banks, not just in Europe, but France for sure, Germany for sure, Italy for sure, UK for sure, are more and more aligned with the national governments, and the risk of that institution is more similar to the risk of the economy of that nation. So as the economy falls, all of the banks are going to go the same way. It's a bit of an all chips on black from a risk management point of view. The second thing that's happening is these larger banks are becoming more and more utility-like, extremely safe, very safe, very connected to the government. But will they be agile? Will they be mobile? Will they be innovative? Will they be creative? Or are there going to be phenomenal opportunities below that level? And we've invested in Panmure Gordon, Kepler Chevreau, which is Paris-based, where we're seeing a significant pickup in business relative to our competitors since COVID-19 has come in.
Would it make any sense at all for one of the big US banks to buy one of those big names in Europe? Or is that just not going to happen?
I don't think it's going to happen. I think, from a global point of view, the US banks already have kind of the investment banking and capital markets business with a pretty strong competitive edge. And I think the days of the US banks, at least for the next generation, either being allowed by the regulators or by their shareholders to get into retail banking in European countries is just a non-starter. Their retail banking business is going to be focused on their national and the technology. But I think the possibility of the big U.S. banks acquiring businesses in Italy or in Germany or in France, I think that they're there if they wanted them, but I think it's a non-starter. I spent 3 decades of my career leading up into the financial crisis at Morgan Stanley and at Barclays, where things every single year for 3 decades were becoming more global and more global and more global, becoming more universal, more universal, more universal, where the competitive advantage of being with a Barclays, a AAA balance sheet, was enormous. It's all reversing itself. Today, you have this cadre of global banks, too big to fail, protected by buffer upon buffer upon buffer of capital. And below that, the focus is much more on your nation or your region. And it's much more on picking specific products or specific technologies, but not trying to be all things to all people. When the crisis hit, COVID hit in Europe, our business, the Paris-based business we have, Kepler Chevreau, sales, trading, research, execution of equities. Now, no one has ever talked about European equities as being a good business. But Laurent, who's built this business for 7 years, is quite profitable. And when the crisis hit, one of the US bulge bracket firms had a technology glitch. It went on for 3 or 4 days. And I will tell you that the CEO of that US bank today still doesn't know he had a technology glitch. European equity trading was probably 476 on his list of priorities. For Laurent and Kepler Chevreau, it was their only priority. And so they took significant market share during that period. And I think focus and selectivity in certain of these businesses is going to be a big attribute.
Can we talk now about Wall Street and Main Street? Because there's this incredible disconnect over the last 2 months. The Economist had a great cover on that, where Wall Street's, the stock markets have done extremely well, but we know something's not right. How do you feel about it? I mean, things are feeling very toppy right now for me.
Well, Federal Reserve Bank, Federal Reserve Bank, Federal Reserve Bank. In the early 80s, when I was first in banking with Morgan Stanley, when I was in the fixed income department, and I was a trader, and I loved the financial markets, and I loved taking risk in the financial markets. But one of the critical risk management principles that we learned early on, and we never deviated from, follow the Fed. And if you follow the Fed, you're usually in a pretty good place, particularly if you're kind of in the fixed income markets. Rob, what the Fed has done here is mind-boggling. So in 2008 and 2009, where I think to a large degree the Fed helped save the system from calamity, and I think we would all agree with that. It took them months and months and months before they ratcheted rates down. It took them months and months and months and one failure in Congress before TARP was approved. And then, they did a limited amount of buying, and we were aghast at QE1, QE2, QE3, and how much they were doing, a couple trillion. Well, now they came out like the second day, March 23rd, boom. And within a day or two, they took all caps off. There's no size limit. We are here until we want to go home. There's no limit to how much we're going to buy, and the breadth beyond just treasuries and mortgages into corporate, investment grade, municipals, ETFs. This is truly remarkable what the Fed has done. And I think it's had an enormous impact on the financial markets. I think the question that remains to be seen is, will the underlying economy recover as quickly as the financial markets? And I think, in my mind, it will not, but it will absolutely recover more quickly because of the Fed actions and because of the fiscal actions. But I think it's going to be quite jagged, quite long-term recovery. 20 million fewer people working in the U.S. than there were in February and March. They're not all going to get back to work in the next couple of months. So I think we have a much longer recovery period, and it will be very different by sector. But you bring up a good point that there's somewhat of a disconnect between looking at the equity prices and the bond prices versus looking at the underlying economy. And to me, the key to this is, are we doing enough for small businesses? Because I think small businesses are, about 60% of the employment that will come in the U.S.
But there must be a payback time, and in a bubble there isn't a payback time. But we've got China now, and I'd love to get your comment on it, and the dollar. I sense the dollar's weakening.
Yeah.
China, there's a war going on. What's China's reaction? What are they going to do?
So China's an interesting one. I think if I go back to first principles, then my first principles are that with coronavirus, we really haven't seen anything new from a public policy point of view. We've seen an acceleration and maybe a galvanization of trends that were in place prior to that. And in trade, I think that's true. I think global trade is not a thing of the past at all. I think it's something that it will continue to be a strength. I think much of the supply chain disruption is there. I think the tensions between the U.S. and China in terms of trade relationships have been accelerated. But I think importantly, Europe, Asia, Middle East, Africa are all looking at China somewhat differently today, a bit more skeptically today than they were 6 months, a year, or 2 years ago. And I think we had kind of a 20-year period where China was seen, because of their interest in natural resources, their interest in spurring the economy, were in places around the world that I think were considered at the time to be a balanced benefit to both China and where they were investing. And I think people are seeing that is a little bit less balanced today. So I think the presence of China as an investor in many of the emerging markets and in some of Europe is being looked at more skeptically today than it was prior to this crisis.
Mohammed Durat asked a question here. He's a South African. He and I do a lot of business together. And funnily enough, about 6 weeks ago, he said to me, I'm worried about the banking system in South Africa. And we ranked the banks, the main 5 ones, on who was least likely to go under and who was most likely. But that's not a conversation for today. Watch out for Nedbank. And Mohammed Durat said, with US debt approaching 30 trillion, no one gets that number. Is confidence in the dollar going to disappear? The thought of the US defaulting seems impossible, but is it becoming more likely? Is there a chance?
I would say no. I'm pretty confident in the U.S., but I think a lot of that has to do with the actions that we see a year from now, 2 years from now, 3 years from now. And you can imagine the acceleration of this, where, to the point that I mentioned, Rob, and one of the things I watch are, so the truth is that a lot of the success during the COVID-19 period in financial services has gone to the bigger banks who are working closely with the government. It's also gone to Amazon and Walmart at the expense of small businesses who were considered non-essential and had to close, while Walmart and Amazon were considered essential and open. And so I'm watching the risk of losing that small business sector is in strengthening kind of the consolidation. And the same things I was saying about banking, which is that the larger interconnected, strong national banks in the US, rightly or wrongly, because this isn't a value judgment, it's a fact, have become more connected and more intertwined with public policy in the United States. Look at France. It's moving back toward that model of the 70s and 80s with national champions focused on the public policy of France. Look at Germany. So we've seen that model in Europe, and we're taking a step toward that in the US. Will that all reverse at some point, or are we moving toward a slightly different model of the connection between business and government? And I think it's those things that we have to watch as we go forward, about how much of this unwinds. There's absolutely a huge price to pay down the road. Is this economy capable of doing that? Absolutely. Will public policy be in line with it? I think that's the question that's being asked.
And Hywell George, Welshman with Old Mutual in South Africa, asks about, are you worried about the extent of the stimulus? You're saying Fed, bazooka, and inflation. Is this an inflationary environment or not?
So I think that right now it's very, very hard, very challenging to be critical. And I give both the Fed and the Treasury very, very high grades. I had said 3 or 4 years ago, and you will recall this because you and I talked about it quite a bit, is with the QE actions that came during the financial crisis, we did not need the fiscal stimulus that our president put in a few years ago, 2 to 3 trillion, through tax cuts and spending. It's almost like, aren't you going to save anything for when we need it? And I also said at some point we have to get back to a more normalized yield curve. And Chairman Powell mentioned this morning that you should look at zero interest rates out to 2022. So I think the question we're all asking is, there's no question that what they're doing is correct now, but what is the plan, and at what point is it get unwound and get back to more normalized levels, or are we stuck in this kind of? And clearly, if we're stuck in this, then your projections about weak dollar and inflation are absolutely correct. So that's what we'll see in the next 2, 3, 4 years. But I think right now I could do nothing but have admiration for the speed, the breadth, and the size of the actions taken by the Fed and the government.
And will that have any impact at all on the election in November? I mean, do you have
does the economy have any impact on the election? I think so.
Yes.
I think it's going to be a very, very interesting election for all kinds of reasons. But if you take one side, which is the polls would suggest that Biden's lead is widening, and on the other hand, I would challenge anyone to name an incumbent who hasn't been reelected with the economy strong, and there's no cases of it. I mean, the case when HW lost, the economy was weaker, and we've seen those in the past.
So we've got Jason Watkins. He apologizes first for calling you Bod, but it was close enough. Jason says,
I've been called a lot worse, Jason.
Yeah, me too. What impact are collateralized loan obligations going to have on banks?
I am not an expert on CLOs. I know, I probably kind of a novice in terms of the impacts on the banks. I suspect, and I want to give the big caveat, that the one thing we don't spend a lot of time on is looking at the big publicly listed banks. We have no interest in public equities. We're buying businesses and running businesses. So I want to give you all the caveats. But I think a lot of that is outside of the banking system. I think the lessons learned of 08 and 09 to not allow a lot of that risk to accumulate have been kept by the regulators, where we had a lot of, quote unquote, AAA stuff on the balance sheets in 08 and 09. So I think they're more in the sector outside of the big banks. I think I'm right on that, but I don't think it's going to be a big impact. I think loan losses in general will be a huge issue to watch with the banks. I know I didn't look at the detail, but I know yesterday Wells Fargo took quite a hit in their equity market because of projections they made on non-performing loans. But I don't think it will be around CLOs. I think those are pretty well distributed, and it's been the smaller firms that have been doing the creation.
Which feeds a bit into John Carsey's question about landlords and tenants. And obviously, both are in trouble due to the lockdown. In fact, we had a webinar last week, 2 tenants, 2 landlords, going at each other. And it wasn't pretty. Are there 2 or 3 strategies banks can do to provide relief? Landlords and tenants, there's a legal...
Listen, this isn't quite as direct an answer as you would like, but I would say 2 things. I would say that for better or for worse, our landlord in New York is one of our largest investors. We're going to be paying our rent. So you can be assured of that.
But then people are, I've been remote working for 3 years from Cape Town, flying around, but other people have realized it actually works. Some companies don't need offices. Tell us about the trends that are really kicking in.
So I think, do I think there are whole businesses that will go to remote working, potentially technology firms, but away from that in core, no, I don't. I'm seriously anxious to get back with my partners, with our investment team, and as successful as I think the technology has been and we have been during this 12-week period, you can do anything for a month or 2. But I noticed on, kind of 3 months and 4 months, it's getting a little bit challenging. Do I want to be out in the Middle East, spending time with some of our investors and talking about other things that we're doing? Can everything be done on the phone or video? No. Would I benefit, and would my partners benefit to spending more time in Europe right now with Kepler-Chevreux as an example and helping with some of the initiatives we have there? So I do think we're going to take a lot of what we've learned and recognize that there are far better uses for technology than we thought before as a group. I cannot imagine I will ever travel as much going forward as I have in the past. But I also think that my willingness to travel is a competitive advantage to the way I think and the way I interact, and my ability to be with people when it's time to launch new businesses or install new teams is going to be valuable. So do I think people can work remotely forever? No. I think it will be interesting in terms of space, Rob, because I think we'll have a double-edged sword of, we're not going to be able for the next few years to have some of the formats or layouts that we've had in the past, which are, big bullpens where people are on top of each other. But on the other hand, we definitely don't need as many people in the office all the time as we've had in the past. So I think it's going to be
a bit of a blend.
But it will create some chaos because it's going to be a change.
Yeah, I also think of education in that way. Some homeschooling, some in and out, but that's not the topic. Right. Coast Sullinger, second question: is the Caboose open in Nantucket?
What's the Caboose? Does he mean the club car?
I don't know. It must be a pub that I haven't been to. I don't know. But his question:
if there's a place here called the Caboose, I missed it, and I don't think I missed any of the good ones. So maybe it's the club car he's thinking of.
I think he's responding, but he did ask about gold. I mean,
yes, club car. I see it come through. So they're not opened yet, but most of the restaurants opened. They've been open for 3 or 4 weeks for takeaway, curbside pickup, and then Monday night, the state allowed them to open for outside dining. So I'm going out to dinner Saturday night at Galley, which is right on the beach, so the seating outside. It'll be the first time I've been in a restaurant since, I think, March 10th. Looking forward to it.
More importantly, golf courses. Have you been playing?
So it's been really cool since we've been out here for so long. Sankaty opened early, and my son-in-law is with me, who's a superb athlete, but doesn't play golf. So we've been playing like 3 or 4 times a week, and you're able to go out and take 3 or 4 drives on a hole and really work on his game. So it's been really good. None of them have their clubhouses open yet. None of them have caddies yet. You just have to walk the course. The pins stay in the hole, probably like it is many other places. But golf is golf. And during this stay at home, being able to get outside for 2 or 3 or 4 hours at a time has been fantastic. And the caddies at our club arrived this Friday. I've learned how to carry the bag, Rob. I'm pretty good at it.
Okay, now comes the question. How many hole-in-ones have you got, and where were they? And there's a reason I'm asking it.
So I have 3. My first, interesting enough, was when I was first playing golf, and my son, who works for me, Robert Diamond III, is on this, and he will remember this. He was like 6 or 7 years old, and he and I and my wife went up to the Belfry from London, and I had a hole-in-one on the 12th hole, which is like 230 yards uphill, par 3, and I couldn't believe it went in the hole. I remember Rob turning to me and saying, "Nice shot, Dad." And I grabbed him and I said, "You don't understand what just happened. That wasn't a nice shot. That was a hole-in-one." So number 5 at Loch Lomond and number 8 at Nantucket Golf Club were my other ones. Yeah. And none of them were great shots. I've had better shots that didn't go in than the ones that did.
I knew you were going to ask me the same question, and it's 3 for me as well.
Where?
The 14th at Queenwood, the 12th at Leopard Creek, the downhill hole for the South Africans that are on here. And here's the big one. During the downhill, the 8th at Carnoustie.
Wow, how much did that cost you the next year in your
No. It was my last hole. I wasn't going to make the cut on the 3rd day. And I had one more hole, played it. My phone was ringing off the hook. Johan Rupert. I answered it and he said, "I heard you got a hole-in-one." I said, "Yeah." He said, "That'll be 20,000 to the South African Golf Development Board. Dollars, not rand." And he hangs up. Okay.
Yeah.
And then it rings again. It's him again. I can hear people in the background. He goes, "By the way, which hole was it?" I said, 8th Carnoustie. He said, "What club did you use?" I said, a 4-iron. I said, a 4-iron. And he said, "You're South African. Tell people it was a 6-iron," and hangs up again. Bob, just tell us what's happening in America right now. The sort of riots and the Floyd stuff aside, is America unwinding? Is this the end of the great empire? Are you a little worried where it's polarization and where it's heading?
So income inequality is a real issue. And we've seen, again, when you want to talk accelerations, COVID-19 is accelerating a trend that was already in place, and we can't ignore that. Larry Summers, who's someone I love to listen to and is one of our advisors in Atlas Merchant Capital, compared this when I talked to him a few weeks ago. I think he was quoting someone else, but he said that we've kind of combined 4 things into this one period, which is the Spanish flu of 1918, the Great Depression of 1929, the Civil Rights Movement of 1968, and the presidency of Andrew Jackson. And those 4 things kind of bring to life. We have a lot of challenges here. I do believe, and I'm always an optimist, but I do believe that there's a bit of a call to arms here, and that the systemic racism that we have seen in this country has to be addressed and has to be eradicated. And so, this wasn't an isolated incident that triggered this. And let's hope that there's some positive action and some positive movements on that side. And I am an optimist. I think there will be. I think this is a little bit of a wake-up call to people that we're assuming things are more resolved than resolved in just that, in terms of systemic racism and the impact of police on racism. So let's be positive in terms of the other challenges. I think we're seeing accelerations of just what we've seen.
What surprised me, caught me by surprise, is that the pandemic is suddenly a global issue overnight. The reactions of governments to it have just spread worldwide. The riots in America, BLM, boom, worldwide. I think we're seeing something in the world that it's an interconnection we haven't had before. And I know move away from globalization for the obvious reasons for the time being, but there's also, you light a fire in one place, everyone catches a light.
I think that's right. And I think this is a U.S. issue, which is also shared in many other countries. And I've seen a number of people write about this in the UK, for example. I think both you and I have seen some of the same issues around systemic racism. But I think for our country, we have to deal with it as our issue and hope it has impacts on others as well. But I don't think, we can step back and say we have to deal with it. And hopefully we do.
On business before we wrap up, and guys, if there are any other questions, please fire them up. Now's your chance. But you don't sit still. I know you. I know you don't. Ants in your pants. What's the next big project? I want to know what the next big business project is, and then whether you have a vision or a dream on something else that you'd like to achieve.
So I think in terms of business, having just invested our first fund, I think for anyone who's been an investor, no matter how experienced you are, getting that first fund raised, getting those portfolio companies going, and having success is maniacal in terms of concentration and focus as you're developing a new business. Now that we look forward, we see that there are opportunities out there because of what I've said about financial services and consolidation and the concentration of risk at the larger, not just banks, but insurance companies as well. So one, we think the opportunity in buying pockets of risk out of insurance companies is unbelievable. We bought a $1.7 billion portfolio of variable annuities from Hartford Insurance a couple of years ago. It's gone very, very well for us. But we see the large insurance companies now having significant issues with zero interest rates, COVID-19, regulatory capital, and they have two choices, Rob. They can either raise more equity or they can exit parts of the balance sheet. And I think that's the area that we think the opportunities for returns are going to be phenomenal. The other one is three of our businesses that have just been absolutely killing it since the issues of February and March in terms of the slowdown in the economy. Our broker-dealer in the U.S., which is South Street Securities, and it does U.S. Treasury and mortgage repo. They've had I think by March, they'd had their best year in 12 years. Kepler Chevrolet is growing in market share, profitably, growing both absolute profits and market share driven profits because volumes are up. We keep no risk on the balance sheet. Panmure Gordon in the UK, focused on middle market where the big banks just aren't paying attention. The middle market companies, we're seeing it. There's another accelerated book build every single day for small companies there. They need access to private capital. And I think being focused and being selective, sticking to a region or a product or technology, these businesses are no longer best served in a bank holding company. The regulatory capital is better outside of the bank holding company. And the ability to be focused and selective on just individual product sets rather than trying to be all things to all people. So the broker-dealer space, insurance, and I would say third, the opportunity to invest in distressed corporates once they're at the level that you think it's safe. I think they're going to keep us pretty busy for the next couple of years.
But before you get on to part two of the question, which is what do you want to do non-business? Just you're raising money. How much are you raising now? Is it permanent capital?
Yeah, we're not allowed to say because the rules about fundraising are, if we were fundraising, I wouldn't be able to say it.
Okay. I gotcha.
It's just the SEC rules are very, very clear and we're always very careful.
Understood. So on non-business, do you have a vision over the next few years of something you'd like to achieve? Or I'm not setting you up. I'm just testing you.
So my two areas of passion are, golf and tennis, staying very, very active. And I think one of the great joys for me when I was at Barclays is that through the sponsorships of the Barclays Scottish Open, the Barclays Singapore Open, the Barclays and the FedEx Cup, being involved in both the access to clients and to customers to the game of golf, whether it's playing it or attending it, was phenomenal. And the other area of just intense interest for me and focus is education. I've been on the board of a small school in Maine, Colby College, for 25 years. I just stood down as chair a few years ago. And I think, to your point, particularly these small liberal arts schools, which I think provide phenomenal opportunities for education, but really don't work in a technology sense. Well, technology can help, but they're campus-oriented, small classes, professors there, very interested in seeing how they adapt to the environment we've been in, where so many of these campuses were closed down last year.
Where did
so
you
those
go?
are the two areas outside of work that I get very
Where did you
interested
go to
in.
school?
Where did I go?
Where did you go to college?
I undergraduate at Colby College, and graduate school at the University of Connecticut.
So Mark Hissey, he's a mad golfer who I've known for, 30, 40 years, says, how do you like the latest changes to the Sanctum Head golf course by Jim Urbino? That's all that matters.
I would say two things. One, Hiss, I saw the video of you trying to hit that ball out of the water, and man, your legs are really ugly. I got it. But good hit. You got it out. Sanctum Head is unbelievable. I've been playing it for 3 or 4 weeks. The greens are already rolling like a top. Urbina is a star. As you know, Rob, they took down all of the kind of the bush and stuff. So you now stand up. It's up on a hill, and it has a piece of land on the Nantucket that goes out over the ocean and by the lighthouse, and it's absolutely phenomenal. And by taking out a lot of the brush, it's just now wide open, and it's just one of the best golf courses I've ever played. I feel absolutely privileged to be here and to be able to play Nantucket Golf Club one day and Sanctum the next day and have these two courses like 3.5 minutes from the house. It's very, very cool.
I know the last question, Matt Kritzman's question, is coming in from Dubai, but just to let you think about it, I'm going to ask you for the one mantra or the one saying or the one, the one short poem that you love. Our friend Dermot Desmond has so many of these. My favorite one is, life is a mystery to be lived, not a problem to be solved. He's got hundreds of them. So
yeah.
Matt, okay, here comes Matt. So I want you to think of yours because I'm going to ask you as to wrap it up. How and why is the construction industry still showing strong growth in the US? And how are the banks handling private sector support? Interesting. The construction industry was still showing growth.
Once you can look in New York, you can look in Nantucket, you can look at almost anywhere. Once they deem that non-essential works like construction can go back, boom.
Yeah.
I would be very positive on it. I agree with that point. What was the second part of the question?
Well, I'm going to switch to Skulk Brits, who's a very famous Springbok rugby player. And as you know, South Africa are world champs, but you did know that. Skulk, what have you learned as an A leader?
Skulk asking?
Skulk's asking. Skulk Brits.
How are you, Skulk? Great to hear from you. I think it's very similar to what you're asking a little while ago, which is that at the end of the day, it's important to have conversations like this. It's important to be able to set the macro environment in context. But at the end of the day, if we want to be successful, it's execution, execution, execution. As a business leader, are you clear what you're doing? What are your promises? And can you deliver on your promises? It's not much more complicated than that. And everything else falls from that. How you engage people, how you hire people. What are you promising? And are you delivering on your promises? And that's execution.
Bob, I'm not going to ask, do you miss the big bank world and being free? You're always free and you're always moving. But do you have a mantra and a saying that you love, that you and Jennifer love, or something that you hang your hat on?
Well, it's something I hang my hat on. I can't say that Jennifer loves it, but for those of you who have watched my my favorite movie of all time, which is The Good and the Bad and the Ugly, my mantra is, if you're going to shoot, shoot. Don't talk.
Bob Diamond, you're such a great friend. I love playing golf with you, and it's always great to see you and hear you. We had a hell of a crowd here, by the way.
Fantastic.
Thank you very much. Yeah, thank you so much. We'd love to have
Rob. Great stuff.
All the best. Bye, buddy. See ya.
See ya.